The CalPERS Long-Term Care Program has become an unmitigated disaster in my opinion. In this video, I explain why, and I offer a few suggestions if you currently are thinking about long-term care options. Much of the information in this video comes from a lengthy article by certified financial planner Lawrence Grossman that I posted recently in the latest news section of the California State University Emeritus and Retired Faculty and Staff Association website. A link to the article is provided in the comments section of this video. By way of background, the CalPERS Long-Term Care Program was created by an act of the California Legislature in 1995. This act and subsequent legislation stated that the CalPERS Board of Administration shall award contracts to private insurers qualified to offer long-term care policies. The Act further stated that CalPERS may offer a self-funded program to provide long-term care insurance to CalPERS members. The seeds of the current CalPERS Long-Term Care Program disaster can be traced to the two words shall and may. Soon after the CalPERS Long-Term Care Act was ratified and enacted, CalPERS began to aggressively market long-term care policies to its members, including yours truly. The marketing brochures implied that the long-term care program policy premiums would not increase over time. Several options were offered at different premium rates. Purchasers could opt for limited term coverage or for lifetime coverage should long-term care be needed. In addition, there were options that included inflation protection should the cost of providing long-term care increase with time. The marketing literature for the CalPERS program was silent about the risks associated with the program. It did not inform prospective purchasers that the program was entirely self-funded, that neither CalPERS itself nor the state of California were guaranteeing the policies. In addition, the literature did not advise prospective purchasers that the program was not subject to regulation by state insurance regulators, or that there was only very limited actuarial data available at the time for long-term care insurance programs. In order to remain solvent, the CalPERS Long-Term Care Program has had to raise rates several times between 2003 and the present. These rate increases have forced many policyholders to drop their policies or to reduce coverage to continue in the program. Since inception, the CalPERS Long-Term Care Program rate increases, with compounding, have totaled about 900%. At the same time, inflation in the cost of long-term care services has been approximately 150%, and licensed commercial long-term care insurers generally have been able to keep their rate increases in this range. A good example is the federal long-term care program, which currently is insured by the John Hancock Life and Health Insurance Company. They have been able to keep their rate increases to about 150% over the same time. This suggests that serious levels of mismanagement have taken place within the CalPERS program. This could include inadequate underwriting and/or poor management of investments. Another sign of internal problems within the CalPERS Long-Term Care Program is the closing of the program to the issuance of new long-term care policies for significant periods of time. Traditional long-term care insurance is much like fire insurance or homeowners insurance. Companies that offer fire insurance and homeowners insurance operate on the principle that a relatively large fraction of their policyholders either will never file a claim or will only file claims for much less than the full amount available from the policy. They also operate on the principle that they will have a steady stream of new customers to replace policyholders who leave for one reason or another. The companies depend on a steady or growing stream of customers so that they can invest a portion of their premium income to cover the cost of future claims. Thus, the fact that the CalPERS Long-Term Care Program stopped issuing new policies on more than one occasion does not appear to make any sense. There was a class action lawsuit filed in 2015 by certain CalPERS long-term care policyholders still residing in California. This class action lawsuit eventually resulted in a settlement that would have provided some relief for some of those policyholders. However, recently, the CalPERS Long-Term Care Program withdrew its settlement offer, and many policyholders now are faced again with the prospect of either dropping their policies or once again significantly reducing their coverage to be able to cope with steep premium increases. The future viability of the CalPERS Long-Term Care Program once again is in doubt. At its peak, the program had about 200,000 policyholders. Now it's down to only about 120,000 policyholders who are aging and who are more likely to require long-term care benefits. Regulated insurance companies here in California belong to either the California Life and Health Insurance Guarantee Association or the California Insurance Guarantee Association. Funds paid into these associations by the licensed insurance companies doing business here in California ensure that if your insurance company becomes insolvent, you will continue to receive their benefits. Had CalPERS not been so arrogant as to assume it could do a better job with a self-funded program rather than contracting with a licensed California insurance company to insure the LTC programs, the CalPERS long-term care policyholders would not be in such dire straits as they now find themselves. The CalPERS long-term care program has become an unmitigated disaster in my opinion. It is time now to demand action from public officials here in California. Our legislators, our governor, and members of the CalPERS Board of Administration. They need to determine how the program came to be so egregiously mismanaged, and they need to find a way to guarantee the solvency of the fund so that those who paid their premiums in good faith get the benefits that were promised them. Finally, I have some advice for those of you who currently are exploring long-term care options. First, I encourage you to visit the long-term care page on the California State University Emeritus and Retired Faculty and Staff Association website for some valuable background information on long-term care now available. The appropriate choice for you will depend on your individual financial and family situation. However, there are several new options available in addition to traditional long-term care insurance. They include self-insurance for those with substantial liquid assets. Likewise, those with substantial assets may want to consider a continuing care retirement community that has long-term care available on site. If you already own a life insurance policy, you may be able to sell your policy in a viatical or senior settlement and use the proceeds for long-term care if you need it. In addition, the life insurance industry and the annuity industry now offer products with long-term care options. Whole life policies with a long-term care option generally allow you to use up to 80% of the face value of the policy for long-term care. Unlike traditional long-term care insurance, which provides no benefits if you never need long-term care, whole life policies with LTC options provide benefits to your heirs if you never need the long-term care or if you use less than the maximum long-term care benefit. Likewise, the annuity industry has introduced long-term care options that allow you to start receiving your annuity payments early if you need them to cover long-term care. You should also be aware that while Medicare generally does not cover long-term care, there are a few situations in which it does. In California, those with limited incomes can obtain long-term care benefits from Medi-Cal, provided they meet income limitations. And finally, in California, Medi-Cal partnership policies are available to those with limited incomes. These partnership long-term care policies are low-cost long-term care policies that provide limited benefits, but which allow you to receive long-term care from Medi-Cal when the policy limits are exhausted. Thanks for watching. I hope you have found this video interesting and informative. If you haven't done so already, I would appreciate it greatly if you would subscribe to my YouTube channel. Just click on my picture in the circle below.